Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Bill Dodd and thanks for joining us today on Market Journal. We've got another great show in store for you today, so let's get started by taking a look at some of the trending topics in agriculture this week. And starting things off today, as harvest is winding down, crop producers will be weighing several decisions for the following season. One of the most considerations of all will be what type of seed you select. When determining which seed you'll utilize for the next growing season, it will be paramount to consider how the product you select will hold up against a variety of crop diseases. This is important when you consider nearly all of the diseases of corn and soy in the Cornhusker State are caused by pathogens that survive the winter in fields from year to year. More often than not, these pathogens survive in infested residue or crop debris from seasons past.
So for diseases of corn, there's a number of things you can do with your hybrid selection and placement of those numbers in the fields to help you reduce disease severity. One of the best examples is to select hybrids that are resistant to bacterial diseases in particular. And so, for example, we have Goss's bacterial wilt and blight. A lot of people haven't seen that in a few years and they may not be thinking about resistance, but those that have had a susceptible hybrid know that when we've had a little light hailstorm, they'll see that disease flare up and cost us a lot at the end of the season. And finally, for corn hybrid selection, many people may be aware that we've now observed tar spot move into the eastern part of the state. Well, tar spot is a disease it's going to be new to us, and it might not become severe immediately, but we do know that some hybrids vary in their reaction, and so I would visit with my seed company agronomist if you live in the easternmost counties in Nebraska, and especially in those areas where we did confirm tar spot this year, because that might help you reduce disease severity if we have favorable weather conditions and the disease really flares up. And so that'd be a good thing thinking forward about that disease management moving into 2022.
Tamra also tells us there are a few new developments you should know about when it comes to selecting soybean varieties that are resistant to diseases such as Phytophthora, root, and stem rot.
Many people have reported seeing more of that disease in recent years, and we might have an explanation finally on why that is. Recent research that was published out of Nebraska and Iowa show us that the common resistance genes, the RPS 1C and 1K that we've been using for over a decade, is only effective against about 30% of our Phytophthora population in Iowa and Nebraska. And so it would really behoove us, if you have a Phytophthora problem, to make sure and look at some of those resistance genes and varieties that are available to you, selecting ones that may be more effective. And in that research, they showed that RPS 3A was the most effective. Although that one may only be available in about 10% of our commercially available hybrids, maybe try to pick a variety that does have that one, and it may help with Phytophthora next year. And if it's routinely a problem for you, just know that seed treatment fungicides containing metalaxyl and mefenoxam can still be efficacious, but you just need the higher rates of those products, or some of the newer compounds like ethoboxam can also be effective.
When it comes to selecting a disease-resistant seed, it's important to understand resistance does not equate to immunity. Furthermore, it's particularly critical that you understand your seed dealer's resistance rating scales.
So in plant pathology, we often talk about disease resistance, and so what we're talking to is the reduction in disease severity. It does not necessarily imply that we have immunity to any of these diseases we're talking about, and so keep that in mind. The other thing that I want to emphasize, though, is when you are looking through the hybrids and varieties that are available to you in a seed catalog, make sure you understand the rating scales that are in use, because often competing companies have opposing rating scales. For example, a 1 to 9 scale where 1 is good for one company, but for the other company, a 1 is on the bad end. And so make sure you understand what exactly that rating scale means.
Tamra also informed us if you have any questions about seed selection, you can reach out to your local extension office, or you can also utilize UNL's Crop Protection Network online. If you'd like to learn more about using seed selection to mitigate crop disease, we've posted a link to Tamra's latest Crop Watch article on the subject to the Market Journal website. Moving on to markets now, and red meat exports were on a record pace through the third quarter of 2021, and the last couple of weeks have seen cattle prices jumping up around $5 per hundredweight. Joining me this week to discuss these topics and more is Briggs Feed Yard owner and operator Mike Briggs. Mike, thanks for joining us this week.
Great to be here, thanks.
And starting things off, when most people look at any market, they will question, what does the market need to accomplish over the next year? As we're heading into the tail end of 2021, what are some expectations you have for how the year will close out, and what needs to happen as we head into 2022?
Well, we're in a serious stage of liquidation here on the production end because prices have been so low now for the last 2.5 years, ever since the plant fire in Tyson in 2019, that basically people are going to have to downsize. You've got a lot, and you had a drought last year, so you've got the cow-calf sector, they're liquidating, they're selling cows and bulls and liquidating, so you're going to have a smaller pool of cattle as we go forward to feed, so that's going to make competition to keep your feed yard full hard. And yet in the feed yard industry, because the packer have such a chokehold on this industry, they're making so much money that we're not. So it's hard for us to pay down to the rancher. It's hard for us to afford to feed our cattle. So this whole thing is going to be really kind of a struggle now because we've transitioned from a oversupply of cattle, we're transitioning to a smaller supply of cattle.
Now, Mike, last month's Cattle on Feed report showed fewer placements in feedlots. What should producers be looking for in the upcoming Cattle on Feed report?
That'll be really interesting because that was unexpected to have lower placements on the last report. So are we gonna start a trend? You know, placements during October are usually some of your largest of the year, October and January. So it's going to be interesting to see. Are we starting to see a trend where placements aren't so big? I don't know, but this can be the start of a trend. You have to have more than about 2 or 3 cattle on feed reports to establish a trend, but I think that's very possible because you saw early placements of cattle off drought. Now you see your standard placements in October. You know, what are they going to be? Now we've been able to fill up, but I know a lot of people have not, so it's going to be interesting to see.
And of course, over the last couple of weeks, cattle prices were seen jumping roughly $5 per hundredweight. In your opinion, what was the driving force behind those price movements?
Well, that's something that's been needed for quite a while. We finally got to maybe where you have a little profitability in this industry now because prices have escalated a little bit to where we can get something done. What forced that? We finally got through all these cattle, all the cattle that got backed up during COVID, all the cattle that got backed up because they said they didn't have enough employees or something broke down or whatever excuse they wanted to use not to slaughter to capacity. Profits for packers are still in the $600 to $800 range. They're making astronomical amounts of money, so they've got a lot of incentive to process cattle. Demand, you know, beef's kind of turned into a celebration holiday kind of thing where you used to kind of see demand kind of tail off into the end of the year. Well, over the last so many years now, beef demand going into the holidays has been very good, and it's very good again. So they've got good demand, they've got a lot of upfront sales, so they need to buy cattle and process. So I think the feed yard is in a pretty good seat to maybe claw back some of their profits. Now, do I think we're really going sky high? No, I do not, but at least we're not continually getting beaten in the head like a baby seal.
And looking at recent numbers, red meat exports were pushing record pace through the third quarter of 2021, looking to be on track to top $2 billion in sales to places like Japan, South Korea, and China. How have those numbers been looking as we near the halfway point of the fourth quarter in the fiscal year?
They've been fantastic. Now we've seen a little bit of a slowdown here because meat got so high. I think hopefully we'll see a little bit more as we go on. You know, the value of the dollar has a lot to do with that. If the dollar starts increasing in value because they raise interest rates, that's going to choke off exports a little bit. I don't even know about the mess at the ports. That's not helping us either. So there's a lot of hurdles getting thrown in the way of the beef exports. But from a demand standpoint, I think the demand is there if they can just get over the hurdles that they need. I don't know what the monetary system's going to do. Are we going to stay level on interest rates? Are we going to increase them? If we do things to make our exports more expensive, that's going to curtail exports. But I think right now we're doing really well. Then there's also the political pressure and the headbutting between us and China, because they have become so big in that particular, in the export market, that could cause problems also. So it's a little murky in my mind.
And before we wrap things up today, Mike, do you have any marketing or risk management strategies that you'd like to share with our viewers?
Well, I think we're going to continue slowly towards reduced supply, so I think this market has the potential to continue to grind higher. Having said that, a lot of cattle, fat cattle for the market in January, February, historically our worst demand months of the year, so that's not good. I think you're probably going to see this thing kind of go up towards the end of the year, and then it's going to be like a leaky balloon for a while. Then once, you know, sun comes out and you get a little hint of spring and maybe somebody wants to drag the grill out of the garage, then I think we make another nice run. But January and February could definitely be a struggle.
And there you have it, folks. Mike Briggs of Briggs Feed Yard. Mike, thank you so much for joining us this week.
Thank you.
Moving over to the grain markets now, and the November WASDE report is hot off the press, and I was joined earlier this week by Heartland Farm Partners President Jeff Peterson to break it all down. So the WASDE report was released yesterday. Were there any surprises in there for you? Any curveballs for producers?
You know, there really kind of was really a couple major ones as you dig into it. Some of the first of all, the surprise, you know, ones that weren't really too much of a surprise on the corn yield. I'll start off there. Corn yield came in at a 177, which if that holds, that will end up being a new record. But we'll have to see. We'll have to see whether that does hold in. As we dig into the soybean side, that's actually where the surprises did come in. And it isn't a surprise that obviously we had expected. Over on the soybean yield, ended up coming in at a 51.2 yield. Now that compared to a 51.5 that we had in the October report, but the trade was looking for a 51.9 yield. And at 51.9, it really kind of felt like we were headed that way, but as we dug deeper into the numbers, here's what we kind of found. Compared to the October crop report, the WASDE, pod counts came up, and that kind of happens. Usually it seems like as they get through and assess more plots. We kind of thought along with that, though, we'd see the pod weights go up also, but they didn't. And as a result of the pod weights coming down, that's where we ended up getting a lower yield. And as a result of that, that did lower soybean production, 23 million bushels, and the trade wasn't looking for that. And what that actually sets up also, everybody was kind of looking for us to go higher in this report on yield. Now we won't have any yield adjustments or acre adjustments in the December report, so the next time we'll get any information's out there in January, but everybody was probably kind of thinking in January we'd see a higher number. It kind of reverses that trend. As we've done a little bit of looking, it looks like there's over an 80% chance if we see the pod weight come down from the October to the November report, we actually could see it come down again as we come from the November to the January report. So that actually means down the road we could actually see some maybe lower soybean yield yet, which is exact opposite what the trade is looking. Now what that did do is that did translate into a change in ending stocks. So when you take total supply minus our total demand and get our ending stocks, everybody was looking for a little bit higher number there, but actually 320 million bushels is where we were last month. Trade was looking for 360 million bushels on the ending stocks, but it ended up coming in at 340 million bushels. Now that's not a big change. And what we do need to see going forward is we do need to see some increased demand from China, but at least it didn't end up growing like what the trade thought.
On the corn side of things, it looks like we saw some record-breaking yields, as you were mentioning earlier, and we're kind of seeing an increase in for ethanol use. How is that going to translate for corn producers?
Yeah, that's a great question. And you know, as we dig into the numbers on the corn side, they did raise the ethanol demand about 50 million bushels in this report. And what we think, though, is as we study where the actual weekly production numbers come out from EIA, what we're noticing, though, is that we notice that down the road, if we stay on this pace, we think there should be some further increases on the ethanol demand side down the road, which will tighten up the ending stocks as we go further down the road. But you asked a great question, what does this mean for the farmer? What we're seeing is because we have a lot of ethanol plants in Nebraska, the stronger demand number that we're seeing out of the ethanol side is meaning some very good basis levels. And the other thing that it did do is it did bring, because we ended up if we think about the ending stock number, we talked about it a lot on soybeans, but that ending stock number came in at 1.493 billion bushels. And last month we were at 1.5. The trade was looking for about a 1.482, so we're a little bit higher, but we did tighten up that ending stock number. And as a result, since we had a pullback in price coming in the report, we're really getting a pretty good little bounce going higher here on the corn side. So I think that also means down the road, it opens up the door to some even higher future prices down the road also.
And speaking of future prices, it looks like soybeans really hit the gas on future prices as well. Can you kind of break down some of the price movements there?
Yeah, exactly. So there's a few interesting things I'd like to look at on what happened on beans, and especially if you're watching during the trade. You know, at one point we had soybeans up over 50 cents a bushel. Now there's a few things that had happened there. We had a big pullback on beans coming into the report. So ultimately the market got a little bit too oversold. But we also talk about computer trade or algorithm trades. And I think what happened is that when that information came out, as USDA was releasing and as they saw the yields come out, what ends up happening is that the computer trade is looking in the news for certain pieces of information. And once they saw a smaller yield, and they also looked at the ending stock where it's at, that caused a lot of buying to step in. More buying than what there was for selling, so that's why we saw that surge. The other thing that we're watching closely, though, is just the strong demand that we are seeing. And I know there's a lot of talk out there that China isn't buying enough, but China is buying some. We'd like to see them buy more. We did end up seeing that reduction on exports of 40 million bushels did show up. So as a result in the WASDE report. But we are seeing some very good crush demand locally, and what that's meaning on the bean side is some really good basis levels there locally. And as we go down the road, as we start talking, we haven't talked a lot about it yet, but as we get further down the road, maybe not necessarily in this crop year, but in the next crop year, we're going to have more talk about the renewable diesel and what that means to the crush industry. So down the road, I think we could see some higher crush demand on the soybean side.
Thanks again to Jeff and Mike for joining us this week. Next week, we'll be joined by Lakefront Futures and Options market analyst Darren Fessler. If you have a question you'd like for us to ask him, please get in touch with us via email or social media, and we'll be sure to pass your question along. Moving on now, and Chef Anthony Brando from Grand Island has a little farming in his family's background, but his main focus when he set up his Veterans Memorial exhibit during Husker Harvest Days in September was to honor American veterans and raise awareness about his nonprofit organization called Business Coalition for Veterans. Brando talked with hundreds of farmers and others during the show and explained how his group helps veterans in need, one at a time. You can learn more about Brando's mission in the November issue of Nebraska Farmer. And it's time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, we've got another week in November under the books. What can we expect in the days ahead?
Well, Bill, we did see some active weather during the middle of the week as we've seen that cold front come through the state. And of course, we've seen some precipitation break out. The heaviest of it was in extreme southeastern Nebraska with some thunderstorm activity around the Falls City area. About 1.5 inches here in Lincoln, about 1/3 of an inch to anywhere to 1/2 inch, depending where you were in the city. But farther north and farther west you went, precipitation itself dropped off. But to our north, exceptionally heavy snowfall and high winds creating blizzard-like conditions across eastern Dakotas and northern Minnesota. So we are getting to that time of the year where we start to really pay attention to each of these systems because they do have the potential to produce some pretty significant snowfall as we move into the early parts of winter or the later part of the fall period. So let's take a look at the upper air models and see what we may have in store for this next week. And the first thing I'll draw your attention to, we do have the cold air that came in through this week and some supporting energy moving around the top of this ridge. It's going to bring another surge of cold air into our region and potentially some flurry activities. We have a low pressure system situated up over south central portions of South or North Dakota, and that is expected to generate some light snowfall activity to its north and to the east. And as that system digs toward the region by tomorrow morning, it will likely result in a little bit of residual flurry activity across northeastern Nebraska, potentially making it as far south as east central Nebraska. But the farther west you go, the less there are in terms of precipitation. But we should also begin to start to see a warming trend as that trough lifts off toward the east. We'll start to see a ridge building back in, and our temperature will start to rebound rather significantly. We're probably going to be looking at 40s on Sunday to in the 50s to possibly even 60s out west on Monday, as we see basically nothing in the way of precipitation, most of it to our east. Now on Tuesday, We should still stay somewhere in the 50s to the lower 60s in a zonal flow. We do have a low pressure system at the surface up over the upper peninsula of Michigan that will generate snowfall, but our next system will be coming down the pipeline as it's starting to enter the Pacific West Coast, and we'll start to see a broad general trough starting to develop. Low pressure was shown signs of development over southern Texas, but because it's moving so quickly, we're not seeing a lot of moisture with it. So any moisture that gets lifted up and interacts with this front is going to produce some very, very light precipitation across the northern part of the state, or even up a little bit farther toward the north. By Thursday, this trough tries to dig a little bit farther toward the south, so we're going to definitely be in a much cooler trend in the second half of next week as we start to see our temperatures drop back down into the 40s, and we may actually pick up a little light snowfall during the overnight hours Wednesday through Thursday. Now on Friday, there is a little bit more jet energy moving along through this zonal flow. Low pressure sits up over northeastern Colorado, so there is the potential that we could see some residual snow and light snow much to our north. But we're going to pay attention to this low pressure system because the GFS model has been indicating that we will see the development of some type of system that will generate some pretty significant snowfall somewhere in the central and northern plains. And the timing of it has been varying anywhere from the middle of next weekend all the way through about the 22nd. So be aware that there is the potential for some significant weather as we go into next weekend or later. 8 to 14-day forecast indicates below normal temperatures up to our north, above normal to our southwest. And in terms of precipitation next Thursday to the following Tuesday, even though we see this dry slot, the latest model runs are indicating that we may see this move more toward the above normal category.
Thanks, Al. Finally today, last month, the University of Nebraska's Institute of Agriculture and Natural Resources held their fall Heuermann Lecture titled Myth Busting, Cattle and Climate, a discussion on Nebraska's livestock environmental footprint. This lecture took an in-depth look at how the cattle industry is currently impacting greenhouse gas emissions and ways to effectively neutralize them. We were fortunate enough to catch up with the event's keynote speaker, Dr. Mitloehner of UC Davis, to learn more about the presentation. When it comes to climate change, there are a number of contributing factors as far as greenhouse gas emissions are concerned. When we take a hard look at emission totals, it's apparent that the cattle industry does have some influence on these numbers. However, the Cattle and Climate Lecture strives to make some critical examinations of those totals and shed some light on some common misconceptions when dealing with reducing emissions tied to the cattle industry.
Well, one misconception is that there are some people who say, climate change is not happening. Well, guess what? It is happening. Another one is, livestock has nothing to do with it. That's a misconception. Livestock has something to do with it. We know how much, but we also know that these issues of producing greenhouse gases do not only pose an issue with respect to a liability, but they can actually, if treated well, be turned into an asset. So I do a lot of research on quantifying greenhouse gases such as CO2, methane, nitrous oxide. These are all referred to as greenhouse gases. So I do research in quantifying those for beef, for dairy, and other livestock species. And most importantly, we do a lot of research in reducing, how to reduce those gases. Because if you reduce them, you have an immediate impact on climate. And that's the majority of what we do research-wise.
CO2 or nitrous oxide.
One of the big points of the lecture dealt with the flawed nature by which methane emissions have been quantified over the last few decades. Dr. Mitloehner discusses newer quantification guidelines and the discrepancy between the two methods.
Yeah, one of the biggest takeaways is that the way that one of the greenhouse gases, which is methane, the way that this gas has been quantified over the last 30 years was significantly flawed, overblown by a factor of 3 to 4. A recent IPCC, that's the Intergovernmental Panel for Climate Change report, confirmed that if you use some of the antiquated ways of quantifying the impact of methane on warming, that you are getting a wrong impression of how important this sector is. And a new way of quantifying methane is suggested by the IPCC as well as by our scientists. So this in no way is a form of greenwashing or so. This is using an appropriate scientific quantification method that is needed for us to see progress over time.
Beyond the miscalculation of certain greenhouse gas emissions, the lecture panel, along with Dr. Mitloehner, describe how we can move the cattle industry from a global warming carbon contributor to a greenhouse sink.
that our soils have the ability to store a lot of carbon. Okay? This is called soil carbon sequestration. And what that means is that the plants that grow in the soil during photosynthesis pull carbon out of the air. That carbon goes through the plant into the roots, and from the roots into the soil with certain microbes. These microbes trap the carbon from the air and they keep them in the soil. And that's particularly working well under grazing conditions, of which you have so much in Nebraska. The question to your university scientists is to quantify those impacts, to quantify the ability of ranching to increase the pulling of carbon out of the air and trapping it, securing it, keeping it in the soil. Making healthy soils one of the most important tools to keeping carbon locked away and not going into the air.
Being one of the largest beef producing states in the U.S., Dr. Mitloehner suggests Nebraska producers can play a key role in changing the perception of cattle production from a global warming contributor to a global cooling asset.
It is a great state that has very strong livestock sectors, and it is extremely important for you to have fact-based information that leads to effective public policy, effective regulations. Because we all have one thing in common, and that is our goal to reduce humans' impact on climate. The livestock sector can be an important solution in this context, and in the next 10 to 20 years, we will show not just that we can reduce impacts, but turn this industry into one that's not viewed as a challenge, but as an asset, not just producing food, but also helping us on the climate side.
Thanks again to Dr. Mitloehner for taking the time to talk with us. If you were unable to attend the Heuermann Lecture and would like to see what you missed out on, we've taken the liberty of posting a link to a video of the event on the Market Journal website. Now that's going to do it for this week's show. Remember, if you happen to miss a story, you can always download the Market Journal mobile app or follow us on social media to join in on the conversation. We'll hope to see you right back here next time. Till then, I'm Bill Dodd, and thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.